The banking sector in the US is right now red hot. Everyone talks about just the AI trade, etc., but the kind of results that we've seen from the banking stack. What really is giving that boost of confidence, even in the middle of so much geopolitical turmoil?
So I think a couple of drivers. So if you look at, say, Citi's own performance, our M&A performance last year, we were up 85% in the last quarter. Overall banking is up 32% in terms of revenues. So it was Citi's best ever M&A year in its history. So a lot of drivers for that. And first of all, with current valuations, there's a lot of responsibility and expectation on companies, boards, management teams to show growth. So if that growth is not coming organically, then the tendency is to, okay, I'll go buy, I'll do something accretive, and I'll make acquisitions. So that's been a big theme, because if you don't show the growth, then investors vote with their feet. You get activists coming into your register, you have, share price being punished and the like. So that's been a big driver. The other kind of wild card has been a massive pool of liquidity, which the private equity guys, the financial sponsors are sitting on, close to $2.5 trillion of firepower. Remember, this is a community that is paid to invest. So they will deploy that capital. And what you've seen is they have, if you look at buyouts, were more than 50% of market activity last year from the sponsor community. So I think that is a big theme. So I would say, really, I think M&A has been the big driver. Abundant liquidity. There's a wall of money looking for investment. And all the capital formations are currently happening in the United States.
Exactly. Why is that wall of money not making its way to India? Or are you seeing some activity in the M&A space, the private space? What is the view there?
So you're seeing a lot of the larger Indian companies looking overseas. So Indian corporates are ambitious. They are looking at assets, both in Europe and in the US. The ambitions of corporate India is absolutely intact. It is. I wouldn't say it's rampant, but it is definitely there. What India clearly, you saw at the beginning, there was a lot of hope and expectation that supply chain rejigs would result in India being a net beneficiary. So this is, basically China plus meant, Vietnam, Cambodia, Thailand, India were massive beneficiaries of this. The whole Make in India theme was very dominant. And I think what is causing an element of hiatus are twofold. One, a concern that valuations at some point got carried away. So in other words, I want to be long India, I want to invest in India, but do I need a right entry point? So do I time it and wait for an opportune moment? I think the second is really the tariff and the lack of a trade agreement, which is kind of still embryonic. There are signs that something is coming and then nothing seems to come. So I think, that will provide more clarity and also greater impetus to the Make in India and the supply chain kind of, manufacturing kind of engine story.
And the rupee, you would say number 3, the depreciating rupee and how it's...
I think that is more dollar strength. And when you look at kind of, despite the macro and the geopolitics, the dollar, the dollar has been very strong. That's also driven by all the inward investment you have seen. The one point also around India is the demographic lends itself, you cannot ignore India. When you have, 1.4 billion people, whatever you can produce, you can consume. It's a captive consumption economy. It's a growth economy. It's a young, vibrant economy. It's an emerging, the middle class is getting more consumption power.